Hey there, it's Bill Beaudry from MarketTimingResearch.com, and I want to show you how to use seasonal software to analyze stock prices and stock news. Now, this is the Yahoo Finance screen for January the 9th, 2012, and you can see earnings season kicks off. Alcoa meets earnings expectations, okay? And so this is, the top news. So the first thing you do is you can use our seasonal software to get the Alcoa data, which is the information from Yahoo, and you can see that this data is all the way from 1963, so we have 50 some years of data, and the normal seasonal is up, okay? But what we do is we have an adaptive seasonal forecast, which is this orange trend line, and if we were just blindly to go in and use all the years of data, this is suggesting that we might have a low later in the month, around the 20th of the month, somewhere around here. So that somewhere in here people would be setting their buy triggers, and then the market might keep going up, but this is not forecasting right now that there would be a peak in May. As we get closer to May, these forecasts all change as we get in more price data. That data, we would go back in the database and see what years are trading most like the market as it's trading right now, and come up with a better forecast. So, but at this point in time, the past years are suggesting, all 50 years are suggesting that this is the pattern that you're going to see for Alcoa. So now when we do some type of correlation analysis, that helps us pick the number of years to be using for our analysis, and that's what we're going to use to analyze a stock. We find that the number of years that we should be using for Alcoa is anywhere from 15 to all the years work. So let's just take a look at that, 15 to all years, and let's just take a look at the bull market, bear market seasonal, and see how that looks. All right, so let's see, 15 years. All right, so this is suggesting that once again Alcoa may go down to about the end of the month, and now we're getting a better forecast of around the 27th, and then it might pop up as we saw before, but then that's about it. There's the topping that you would normally expect is either in this period, but then it's going down based on past years of history. If we move this up to 20-year forecast, using 30 years of data and so forth, you can see as this changes, we're not getting this idea that Alcoa is going to keep going up. We're getting this idea from doing the seasonal forecast that there is some type of top early in March and April. You can see no matter how many years I use, and sometimes it turns out that it's in April if we use just a very few years of data, okay? And sometimes right now the best forecast is coming out from using 15 years of data. And of course, next month that that number might change. But our best forecast right now is, which is how I go by trading. But I'm not telling you to use this for trading. We are not advising anybody to use this for trading. This is just educational purposes of how we construct our newsletter. This is showing that we would be expecting a low sometime around here, and this is where most people would be perhaps selling the puts or buying the calls and so forth and so on. This is sometimes a panic low. And then there's sometimes an options run up sometime around here. So if we take a look at our other ways of analyzing Alcoa, we can find out that if it's a bull market, we have this little tendency once again to go to for the stock to drop around the 20th to about the 27th, somewhere around there. So this is where people are going to be setting a trigger, such as a MACD or some type of trend line. And the market, if this was a bear market, which the market has been following for a while, you can see that the tendency is down, and then it sort of goes up. So this is why people are expecting an upward bias. But as we saw from our charts, we wouldn't even expect this to be the main dominant cycle in that particular stock right now. All right, so seasonal analysis can give you wonderful inside information on how a particular stock trades, and you can see here's Alcoa has been following this bear market seasonal recently, for, I don't know, the last couple of months. You can see it's been going down, and that's the bear market seasonal rather than following a bull market seasonal. So all that taken together is suggesting that, once again, let's center this, that this is our best forecast. We're calling for, a stock, to around the 26, somewhere around here, for there to be a bottom and then the market to go up for, Alcoa. So this is how we analyze news like this. Whenever there's news in the stock market, we quick take a look at that particular stock, see what our seasonals say, and then we make our trades based on that. So people who have a fundamental position or opinion on a stock, what they should always do is take a look at the seasonals to see how that stock trades in similar economic environments in the past, such as a business cycle expansion or recession, or how it normally trades in bull and bear markets, and see if it is actually trading like that, and then use the seasonal forecasts in conjunction with your due diligence that you've done from studying the stocks, and then you can come up with better types of analysis. And we do this, we give you the charts, because you don't want to have all these charts. You just want one chart that tells you, here's the best seasonal forecast that anybody can make at this moment in time. And they're pretty stable. They last anywhere from 1 to 2 months to up to, I've seen them last for 5 to 6 months into the future sometimes. There's no promises for that, but sometimes these things are extremely stable. We only report in our newsletters on stocks that are already following their seasonal or seem to be following their seasonal. And the idea is that if they're already following that seasonal, let me know what that seasonal is projected into the future, because there's a chance that we'll keep following that into the future, and I can use that as an unfair advantage to make money on stock trading investments, or just stock trading or options. Whether I'm writing premium and I want to write premium more safely or with less risk, or whether I want to buy options. You're looking for situations where you might have, if you're buying or selling options, where you might have extreme down situations or extreme up situations. And the reason we're looking at Alcoa is because right now it's in the news, and that's how you use our software, and that's what appears in our newsletter every month. These types of charts that you can use for your trading. This is Bill Bodery from MarketTimingResearch.com, and we hope you take a look at our newsletters and go for one of the free trial subscriptions.